Hey guys, David and I are back again this week. We got our friend Blake on here. He just started trading, I guess, when was it, last May? So about 10 months ago, 8 months ago?
Yeah.
Something like that. Yeah, so we just kind of wanted to get bring you on here because, you're a little bit newer to the game and just kind of go through, why you want to get started, how'd you get into it, like, what sort of processes are you following, just kind of get a bit of that information, Eddie, and see how things are going. I know you're making money already, which is always nice.
Yeah. Thank you very much for having me on. The big thing that got me into it, honestly, to start was Dave. I saw him just posting stuff on Instagram, and it was all like completely foreign to me. Like a year ago at this time, I had absolutely no idea about anything to do with stock market, anything like that. I still don't know much about what's going on, but I'm getting there. It's definitely a learning process. It changes every day, but I'm couldn't be happier that I did decide to start doing this, and having someone like Dave kind of walk me through how to get started, steps to take, what to look for, all that kind of stuff, and it has helped more than anything because there's so many people on YouTube or all those kind of like sites that you want to like Google how to start trading on the stocks, but
Right.
there's so many like, oh, you can get rich in 30 days, blah blah blah, all that kind of stuff. That's all bullshit. So, there's too many people that fall into that. Be like I get messages now. Oh, can you recommend me a good YouTube video to start? And I'm like, don't watch YouTube. Like there's some. So there is some, but if it says get rich in 30 days, it's like stay away from those.
Yeah.
So it's like guys like you that you need to be watching. Even like when I first talked to Dave about it, he's like, watch Warren Buffett, watch Peter Lynch. Like those are the guys that you want to be learning from to start. Not some 18-year-old guy in a Corvette or something.
Right.
So
yeah, there's so many of those things out there, man. That's why we started this thing originally. It's just like, we're not doing this for money or anything. It's just like we just see so many scams and like, like David and I being in it for a while, like we know that it's all scams and there's so many people signing up for these things and paying for it. I just feel bad for them.
So I agree.
So what platform are you using and stuff? Like, what do you are you using like a broker or a TFSA or?
Well, like in regards, I started just on simply on Wealth Simple,
okay,
and just open a TFSA through there. But they take a percent of commission, which started adding up. So when I started adding more money, I even sent a screenshot to Dave. I'm like, it was like my first buy ever, and I bought Tesla. And I'm like, why did it take so much for this? And because it was a percent, it adds up. So he's like, use TD, and it's just $10 flat every trade, which something that does make a very big difference. Like if it's a percent, like even like I started trading Bitcoin and stuff too, it's like they take a Coinbase fee and then there's a conversion fee or whatever. It's like there's 7% already gone or 5%, whatever it is. So you definitely have to watch for that because it does vary. Even like CIBC, RBC, TD, Quest Trade, there's so many different platforms out there that it's important to do your research before you just start putting your money into something and saying, okay, I'm going to buy this without even knowing what type of fees that are going to come along with it.
So yeah, that's
I'm on TD right now. Yeah.
Yeah, that's a really good point because even just this year, like I've been trading on TD or investing in TD for like 8 years, and only this year I started to realize that they charge you like a flat rate for the trade, the $10, which is like highest for the industry. But when you're trading a couple $1,000s, it's not that big of a deal. But what I discovered is they take a rake off the conversion rate. So if you're trading U.S. stocks, you really should open a U.S. trading account because I had a Canadian TFSA. Yeah. And then I was noticing they were taking 2% off the exchange rate every time. So if I had a 10% move and they're taking 2%, like that's bullshit.
I know.
Yeah, especially, if a lot of like, I know I was talking to you, David, a couple of weeks ago, just asking about Bitcoin and stuff, because I know you've been day trading it for a long time and you're, now you're making, 5, 8, 10% moves or whatever. But when it kind of starts to level out, like in the previous years when you'd been trading it, you said you were aiming for like 2 or 3%. So you're basically losing, all your profits just on those commissions, right?
Well, I'm trading on futures now, so they're the highest the fees ever go is like 0.1%, so it's pretty cheap.
Okay. Yeah, that's not bad then.
Yeah,
it's interesting. There's so many different ones out there. Like one thing I'm struggling with right now actually is like with day trading because I'm always shorting stocks like a lot of the time, and I'm always like playing like all the garbage companies that nobody knows about, but they don't have a very high float. Like there's not a lot of shares. So there's like features in brokers where it's called like a hard to borrow locate feature, which is basically like you can pay, say it's 2 cents a share, to have your broker locate shares for you, and then you can get them. So if you want like 1,000 shares, you pay your 2 cents a share, and then you can have those shares to short for the day because they're not readily available. Like, if you go on Microsoft or, Tesla or whatever, you can short those all day long because there's millions of shares out there. But I'm having a very hard time in Canada, surprisingly, finding a broker that has that feature. Like I've talked to Centerpoint, I've talked to E-Trade, like Interactive Brokers is what I use, but that feature is not available in Canada. I've talked to Trade Zero. I've talked to Lightspeed. Like, I think I'm on I must have talked to like 15 different brokers by now trying to figure it out. Cause I've kind of like perfected my long game, so to speak, but now I'm starting to go short, and it's just like this huge handicap I'm dealing with and trying to find a broker that has that available. So if anybody knows one, let me know, but I'm still on the hunt right now.
Yes. So, Blake, how are you trading or are you investing right now, or a little bit of both?
I would say more so trading. Like, I don't know. I don't have any, like, I'm laid off work right now because of lockdown, so I have all the time in the world. So it's like I just stare at my laptop all day and just watch the charts. Like that's all I do. So it's like, oh, okay, like I have this in whatever ETF it is. It's made 2% over the last month. I'm like, okay, well, I could have taken that $4,000 and put it somewhere else. It's like, it's maybe not the best way to look at it all the time because it is more volatile. But so I do have some investments, but for the most part, I'm day trade. Like looking for more like swing trades. That kind
Swing trades, right?
So what stocks are you looking at in particular? Like, are you looking at any specific sectors, or you just kind of looking at what's moving and then doing a bit of research? Like, how are you kind of basing your trades?
So my most successful run I had was in November, and it was all EVs, so electrical vehicles. That was when it had a little boom there. Like I remember I showed Dave Xpeng. This is like my biggest accomplishment in life. I showed Dave a stock before you know, and he's like, and then he messaged me back like they're like 1 o'clock in the morning. Wow, this stock's actually this company is actually pretty impressive, and that was when it first IPO'd. It was like $21, and then it went down to like 19, 18. Playing with it in there, and then slowly just everything started taking off, and now it's, I forget what it's at, 50 something. It went up to 72. I sold that day. It hit 72, and I let it come back down for the most part. But Neo, Xpeng, even like Lee a little bit too, LI. That was my most. I made $8,700 American in one day, and I sold all of it at the end of that day. And it was like, I called my mom, like, I just made a car in one day. And I was like, that was amazing. So yeah. that was definitely. I took that hype and I just ran with it. Even Dave did the same thing. I remember like that one day Xpeng went like 22% in one day or something, and threw it up in his story. He put in, what'd you put in, like 15 grand or something, and just sometimes when the opportunity presents itself right in front of you, it's like, just take it sometimes. Obviously, it's not the best way to look at it always. You don't go off hype. You need to be more analytical with it and like look at the charts, all that kind of stuff. But it's like sometimes it's
right.
It kind of
so
depends.
Like, I was talking to David the other week about like, just trying to get an idea of like what your trading style was, and I was like I hope he's not one of those guys that just started trading in this bull market and he's just going to be under the impression he can just buy anything and make money forever.
Yeah,
it doesn't last. And David is telling me, he's like, no. He's like, I told him make sure he sells on the way up every time.
Yeah.
That's the key, man. You didn't take the ride back down.
No. What, I didn't take the ride back down? Is that what you
said?
Yeah,
because you sold at the top. You did, because I guarantee there's people that took the ride up and then they didn't expect the sell off and they just took the ride right back down.
My one friend who's my age that I talk to during the day a lot, who does this with me, he won't sell. He'll never take profit. And I'm like, man, sell. It's too high. Everything's gone. And that was the day I sold, and that's the day it started falling back down. He's like, oh, it'll go back up. It'll go back up. But like, the one thing you said to me that will forever stick in my head is no one ever went broke taking profit. And that's it's so true. That is the number one rule, because you get greedy and it's like, okay, well, it's running. It's going to keep going, but you got to take profit when you can. So that's one mistake.
Yeah, that's one of the things that I remember some of the traders I followed instilled in my head like way early on is nobody ever went broke taking profits along the way, right? And like even on my swing trades and stuff, I trade the same way. Like I always take a little bit off, and then you're gonna miss out on a little bit of profit, but in the long run, you're gonna save yourself so many headaches.
I know. Yeah, I know. I held on to Well, the one that I was the most out on ever was Palantir. I was out 4,500 American at one point because it was like floating on the same, and then it started going down. I'm like, okay, I don't want to cut my losses. It'll come back up. But that's like that. From that point, I learned that even if I'm losing $100 or whatever, $200, I don't care. I'll get that back on somewhere else. It's worse than being out $4,500 and watching that sit there. So
right, yeah, that's like you like the way I always trade is you always got to know where you're going to cut it before you even get in the trade, right? Like that's especially in like the stuff that I do. It's like it's so quick that like before I even go into a trade, I know exactly how many shares I'm going to use. I know exactly where I'm going to cut it, and I know exactly the dollar value that I'm going to lose if it goes wrong. Yeah. And once I'm okay with that dollar value, then I'll take the trade. Nice. Otherwise, no way.
So have you?
So are you?
Sorry, I just wanted Blake to ask Blake. How did you do in last year anyway? The 2020 that rush.
I think I came down a little bit, but at the most, I was up 75% on my initial investment, which is like I maxed out my TFSA for being 25 years old.
Holy shit!
And I have some in RSP, so that's like, yeah. So I made my year salary sitting at home doing nothing. Well, not nothing, but
So are you planning on like continuing this to swing trade now, or like with all your capital, or like are you planning on like putting some in just like slow growth long term or dividends or?
So I am starting to look at putting more into more long term stuff investments, and staying away. Well, not away from doing less swing trades, but I am wanting to be take more of a safe route. Like I sometimes Dave, everything is red right now. I'm down $4,000 on the day. What the hell do I do? And like, tell me how not to sell everything right now. So it's like you need to be able to. I've never learned like the patience. Like I've worked with kids for 6 years, kindergartners, and like that takes an insane amount of patience. But this is even more because you need to learn. Like you need to have balls of steel when you're doing this. And if you're going to put it in those risky volatile stocks, then you need to be able to see your portfolio down $3,000 on the day sometimes. Because if it's a Black Friday sale, everything's red, then you're down a lot of money. So obviously that'll happen regardless. But when you're playing with the really volatile stocks, it happens even more. So
right, yeah, I know. Like I've talked to David about that a few times, and I think he's like the bridge in between the two of us. I think all three of us have the same like overall perspective. Because like for me, like all my money goes into dividend stocks and long-term investments, but I day trade, which is the most like chaotic, volatile thing you can do. But I don't like to swing trade, right? I don't like to hold stuff overnight. I'm just like I'm so cynical from shorting stuff that I don't ever feel like it's that far up. And then David's obviously like more into the swing trading, long-term investing and stuff, right? So there's I think the bottom line basically that we're all kind of come to the conclusion is you need to have a nice balance of everything, right? Like you don't want to put all your eggs in one basket, essentially.
No, I know.
A nice bridge of everything.
I know. So would you say the Palantir trade was the biggest lesson you learned, or is there a couple more you want?
There was definitely a few, like even Tesla. So I made like. So out of that, like 75%, whatever that I've made, it's whatever, like just 30 grand or whatever. Tesla was probably about $8,000 of that American that I made. And there was one time, so it was in the August run from like July to August, and I was up, whatever, 4 grand. I sold one day before it started coming down. And I'm like, maybe I sold a little bit too early. So this was September 1st or whatever day it started coming down. And it hit that 495 or whatever, 500 mark. And then it came back down. And I remember you had buys for like 330, 350, like when it hit down there. And I bought it the next day after I sold because I thought it was going to run looking at the chart, I thought it was going to run a little bit longer. And it didn't run a little bit longer. And it just started falling and falling and falling. And I was out 4,000 American on that stock too. And it's like, that was me being greedy. I cut my loss, or I took my profit, and I'm like, maybe I can make a little bit more money. So I bought in the next morning by lunch it started falling, and I'm like, oh, it'll come back up, and it didn't come up until it got announced that it was going into S&P.
Right.
So
that's kind of the nice thing. I was thinking too, is like, you know, like when you say I'll just hold it and hope it comes back up kind of thing. Like I don't want to say that's a good thing to do, but I mean the reality is if you're trading those big solid companies like Tesla or, you know, Apple or Amazon or anything like that, I mean you're okay to, you know, potentially get in at the wrong time, have it come way down, and like, you know, it's a pretty safe bet that it's going to come back up. It's when you get into the, you know, the sketchier and sketchier stocks that becomes like lesser of a possibility.
Yeah, it's a really important lesson to learn. Like whether you're like swing trading or investing, it's like, for me anyway, I'm like, you really should understand what it is you're buying and why you're buying it. Because if you buy Tesla for the reason that you think this is going to be a great company 10, 15, 20 years out, so what if it dips 20% this year, right? Because over the long term, that's an insignificant number. Right, versus like you buying a cannabis company you barely know shit about and it takes 50%. You're like, right?
That'll be fine.
Yeah, it'll be fine. Like I know nothing about the business, but I know people might want cannabis and they might legalize it. So they buy this thing, and the tanks, you're just like questioning like everything at that point, right?
Yeah, exactly. You get in that situation a lot, so.
Yeah.
Definitely don't want people to think that it's a good idea to just buy and hold forever if it's down, because that's usually not a good idea. But if it's, you know, like, I guess the best way to explain it is if you're doing like a long-term investment, like I know David does this a lot on Tesla, where he has his core position and then he'll trade around that. So like he'll do those short-term swings on a stock that he knows is good, and he has a big lump sum at a lower value anyways, so he's not really too worried, right?
Yeah, I'm always adding and subtracting from that main core position, like maybe 20% that I trade, and the rest of it I'm just kind of like holding.
Yeah. So like you're not, I mean, even if you take a bit of a loss on it, it's not the end of the world, because you'd probably just hold those shares for the next 10 years anyways.
Yeah, like I said the last podcast, I've only ever sold all my Tesla shares once. It was only to get more Tesla shares off that Solar Cities. So like, so yeah, that was the best trade of my life before I started to learn technical analysis.
Yeah, that's a good point actually. So Blake, have you been basing a lot of your trades on like technical analysis, or more of like the companies themselves, or like have you been, you know, learning chart patterns? Like, do you use any indicators or?
That's what I've been doing as of recent, trying to learn chart patterns more. Even so, I know like with you, day trading, for some stocks, you don't even care what the company is. You don't even care like anything about their fundamentals, whatever. You just care about what the chart is doing, and that's all that matters. And like I remember you said that, so I haven't reached that point yet of having that confidence to do that, like anywhere close. I still look into the company. Like I'm up till like 3 o'clock in the morning, because I click on like one article, and then it brings me to the site. I look through all their earnings, all that kind of stuff, and I just get lost in that. So I still very much so look into the companies before I will invest. So
Right, but I agree with you if you're doing anything overnight.
Yeah.
I wouldn't even hold the stock for one night without knowing a lot I'm company.
Yeah.
That's the difference, right? Like that's why I know I posted on our Instagram today, because I don't want people to get confused, because like when I'm talking about something, you know, I posted that I'm looking at like CCIV for a short on Monday, right? And
yeah.
That's us, and he's like, oh, I'm long that stock right now, like, you know, and I was like, no, like that's not what I'm saying. If you're investing in it, it's different. Like I'm looking for a 15-20 minute move in the morning, that's it, and then I'm out and I don't care anymore. Right. So like all that other stuff is irrelevant. But if you're gonna hold anything overnight, like, you know, you don't know if there's news coming out, or if there's earnings, or if there's, you know, something bad's gonna happen, or if there's an offering. Like that's all stuff that you 100% should know if you're swinging anything more than in the middle of the day.
Yeah.
Actually, I gotta commend you on that, Blake, because I think some of your followers are gonna watch this, and the younger guys, and I just want to commend you on that. You do take the time and effort to learn the companies. You know, you take a lot of advice. You go outside and you find a lot of sources to get knowledge about investing. Right? It's not just about buying the hottest company that's in the room, or like you. I mean, you sent me that company, like, I don't know, like last week or whatever it was. Like, was it renewables or whatever? And you're like looking into it, right?
Yeah. Even like it was January 5th, and it was that bus XF company. They're Canadian electrical bus company. Their
Right,
stock
that
was
one.
at like $4 a share in 2018, and it was $1.89 when I sent it to you, and it's starting to climb now. So like I'll like look into a stock if I'm still iffy about it, but if it's good or not. Dave's kind of like my teacher. Be like, can you look over my homework? Tell me what you think is good or not. So
Yeah, but
yeah, it's like it almost seems like a game sometimes because the money is it's just a number on your phone or on your computer, and you're putting that much of that number of money into a stock, and it doesn't feel like real life. But if I gave you a stack of $5,000 like in bills, you're going to be more weary to say, okay, I'm going to put this in a company and hopefully it'll make money. You're not just going to put it in there blindly. Like you need to know a little bit if you're going to be investing in that company.
Right. I think that's a good point to bring up too, is that I'm sure you could probably attest to this is, it's not a good idea to start doing this if you only have, a couple of bucks, or like you're barely saving your rent. It's like, you have your only $2,000 in savings. You don't want to start trying to swing trade stuff, right?
No.
Because you're going to be way too emotionally attached to that money. You're not going to be able to handle those drawdowns. You're going to be scared. Anytime it goes up, $1, you're going to sell it immediately because you just want to take that, take that buck and get out of there. And
that's a coffee tomorrow morning.
Yeah.
Yeah, I think that's a really, really important thing that everybody should understand. You shouldn't play with money you're not prepared to lose.
100%.
Right.
Yeah. That's what I like tell all my friends too. Whenever they ask me about anything, like they're like, yeah, I want to try and like do some day trading, or like, do you think I should buy this or that? And like, I'll tell them and be like, for me, like, yes, yes or no, or whatever my opinion is. But I was like, you got to realize, like, I'm only right maybe like 55 or 60% of the time. The only reason I don't lose is because I know how to cut my losses and let my winners go. But I'm also prepared to lose 100% of the money that I put into a trade every single time, because otherwise you shouldn't be trading.
I agree.
Right. I should mention that, Blake, are you using a TFSA?
Yeah, Canadian and US, and then I do have RSP as well, Canadian and US. That I put like it was Square, DraftKings, and one other one that I just got really good positions in, like a really good entry point, and I'm just gonna let that kind of sit for a while, probably.
Yeah, I think we should mention that. Like those are really important tools to use if people. I don't know about day trading, but possibly for investing or maybe even swing trading, like a TFSA is like a really, really useful tool because it's tax free, right? Whatever earnings you make on it, it's tax free. Versus like, actually, Kalin, I want to ask you, when you're day trading, do you calculate how many fees you pay by the end of the month from your trades? Do you know?
Like commission and stuff?
Like, would you pay for commission and the borrowing, the short shares and stuff?
No, I don't really pay attention to that, because like on Interactive Brokers, it shows you like directly. So like when I make a trade and it shows me my profit or loss, that's already including commission.
Oh, okay.
So like every day it shows me a dollar value, and that's already taking that into account. Questrade, I don't think does that, because I know when I used to use Questrade to day trade, I'd have to do the math all the time and figure out how much I spent on commission. Let's say I made X amount of dollars, but I actually made this much, right? So that's why I didn't like it, because Questrade, it was $5 in, $5 out. So if you look at some of the trades that I make, I mean, I'll have like 6 or 7 entries and 6 or 7 exits in a few minutes, right? So like right there, you're talking about like 70, 80, $100, right? In commissions.
Mm-hmm. Yeah. So I think that's important if anybody wants to get into trading, that they should take a really close look at the fee structure, whether it's percentages, flat rate, really calculate. Like if you've only got $1,000 to play and it's $10 a trade, dude.
Yeah, I mean, especially when you're learning. I mean, like I always tell people, if you're trying to learn, like try to make $5 consistently, and just aim for $5. Like and don't lose any more than 3, right? And just once you can make $5 every trade, then you go to $10 and you go to 15. Like it's, so if you're trying to make, you got to make $20 a trade right out of the gate. Like that's harder than it sounds for day trading.
I know.
So, but that's why I have Questrade for my swing trading, though, is because Interactive Brokers has the lowest commission fees. It's like it's a penny a stock, but they have like monthly inactivity fees. I don't know what it is, because I'm never not active enough to cover them, but I think it's like $30 or whatever it is, and then I have to pay for the real-time data and everything. But on Questrade, you don't have to pay for any of that. So it's $5 minimum per trade, so it's a little bit more, but there's no inactivity fee. So I can not make a trade in that account for a year and it won't cost me any money. Whereas on other accounts, it'll be like, oh, if you don't make any trades, it costs you $25 a month, right?
Interesting.
Mm-hmm.
So it just depends on like, you know, what you're trying to do and like what kind of trading style you're doing. Because like all the brokers are basically the same. It's really just their pricing structure that's different.
Right.
Mm-hmm.
And you're using, so you, wait, how much is the data feed for, was it Interactive Brokers?
It's like for what I do for the listed stocks, I think it's
Yeah.
like $6 a month or something. Like it's
Okay,
nothing.
that's not too bad.
Yeah, like if you want like because I only have listed stocks, I don't have like OTCs, I don't have TFSX, like I don't have any of that stuff on there. Like I
Right.
don't have Amex, like just all the stuff that I know I never really play.
Right. So I want to plug the software. I know you use it sometimes. Blake, I think you use it to Tradingview. We use that charting software.
Yeah.
Are you using the free version or the paid?
Me?
Blake, yeah.
Honestly, I just have the free version.
It's enough, right? It comes with the. Kalin, you're using the free version too, right?
Yeah, it's a free
You're the
version.
only guy paying for it.
It's real-time data, right? Like I don't get a million indicators or anything, but like I literally just use it on my phone if I'm like out and about and I just want to look and see what a stock's doing. It's easier than logging into my broker, and you know the app on TradingView on the phone is better than either of my brokers anyways. So.
Oh yeah, it's a fantastic app. Like for those that don't know, it's what we use for trading. So you could get a free account. You can get most of the stock data from the major exchanges, but also OTC too. I think they list OTC as well. Over the counter, yeah. I don't know if it's real time though. But like Nasdaq, TSX, whatever, you get the major exchanges, you get the real data feeds and the price history for whatever stock you're looking at, and you can just. There's a lot of great tools on there to draw with. You go. I introduce you to the Fib Retrace. You love that one.
That's made me a little bit of money.
Yeah.
I remember the first time I saw you doing that, I'm like, I see you using these lines all the time. I'm like, what the hell do they mean? And he just like briefly showed me how to draw them in, and I spent probably like 30 hours that week just laying them out over a million charts I had, and I was like, oh, okay, these things could be helpful.
It's creepy how it works. Eh? It's pretty accurate.
Yeah, it's pretty neat. It's like it has its place for sure.
Right. Actually, on that topic, I want to touch on Tesla before we move into anything else. Because Kalin, we were talking like last week about sizing in and out of positions. Because I get messages pretty often from people saying, "Oh, I want to invest in Tesla, but the price is too high? Like, how do I size in and out?" Right. So, from your perspective, how would you do it? Like, if you want to get into Tesla.
Well, like without looking at the chart, basically, like anytime I size in or out of a position, even if I'm doing a swing, I always like. If I find something that I think is really good, then usually what I'll do is I'll draw like some kind of a channel, or you know, if it's like a wedge or whatever kind of rough pattern it's in at the time, I'll usually put a chunk of what I want to put into it at that point when I'm like if I'm talking swing trading or even investing, and then I'll wait for it to come down to the low end of the channel, and then I'll put the full size on. And then usually what I'll do is I'll kind of like as it goes through that channel or that wedge or whatever, I'll sell a little bit at the top, and then I'll buy a little bit more on the bottom, and just kind of keep working my way through that. And then once it hopefully breaks out to the upside, that's when I'll just kind of hang on and let it go as far as it wants to go, and then I'll sell it once it sort of settles up at a higher level. But,
so if we're talking like, let's say it's TradingView, are you looking at the channel? Are you drawing the channel on the daily candles on the daily chart?
Yeah, if I was going to swing trade something or like Tesla, for example, then that's what I would do. But like even intraday, like on day trading and stuff, I still use the same basic principle. Like depending on the setup, there's some setups I do where they move so quick as soon as they break a certain level, I'll just go full size in one shot. But then I'll still sell out at key levels. So like a couple of my long trades, like they usually happen so quick that you got to be right there, and you got to have a trigger finger like crazy fast, and then get into the play. But I'll have overhead resistance levels, and I'll sell a quarter of my position into each line. So I'm sizing out still, right? Because I just don't like holding my whole position that long, because then if it comes back down, it kind of makes you want to get out a little bit more. But like for sizing in, I think it really just depends on what kind of investment you're doing. Like if you're planning on buying something for 10 years, I would say you're probably pretty safe just to go in full size right out of the gate, provided it's not something like Tesla or Bitcoin where it's had this monstrous run up, right? Like at that point I would say no. I would say, even if you want to hold it for 10 years, maybe grab like a quarter of your size right now, and then just let it, it might still creep up, but it might, instead of doing this big parabolic move, it might kind of level out and then start creeping up and, remake a little bit of a base, and then you can go in full size.
Right. So that's the question of the hour. If we're talking about something going parabolic like Tesla, like Blake, you said you still have some Tesla, right?
Yeah.
And you have
like 7 or 8 shares, like not much.
But do you still intend to size back in at some point, or is that it for you with that trade?
Will I add more? Is that what you said, sorry?
Yeah, are you planning to size back in at any point, like waiting for a dip, and how big of a dip? Like, what are you thinking?
Yeah, so like I still want to be there because it could, like with how everything's going right now, it could hit 1,000 by this week. Like everything's crazy right now, so I don't want to miss that. I want to have a small position, but if it drops, it's like whatever, it's no big deal. I'll just buy back in, bring down my average buy price, and go from there because I'm not too stressed. Like that $5,000 or whatever isn't too big, so I'm comfortable with that dropping if it does drop, but it still will give me a profit if it does rise. Obviously, like I would love to see it go up, but if it goes down, it's not gonna hurt my feelings.
So let me pose this question though: what would you do if Tesla started dropping like let's say it gaps down 5% and then it drops another 15. So let's say in the course of a week it drops 35+%. Because it's happened 6 times in its 12 years.
Yeah. He knows the stats with everything about Tesla.
Yeah, I like how you know that just off the top of your head.
Oh, I've been with this thing since 2012, man. It's gone down 6 times 35%, 3 times 50%. I took all those rides up and down as an investor.
Yeah, like you said, like it if it's a company, well, if it should be a company if you believe in, if you're going to hold it for whatever overnight, like Kalin said. But I wouldn't try to panic sell or anything like that because I know in 15 years from now, I'll be laughing that I got stressed out that it dropped down $500 when it's as high as it is. So that's like if you're confident in your investment and the stock that you put your money into, then there should be no reason to stress because you know that you are confident in your decision and that it'll go to where you know it's going to go.
So, yeah, that's a good point. So on the short term though, we could talk about Xpeng because that was when you told me about that company, it was like $20 a share. I remember I bought in around 18 and I sold it at 21 because it was at all-time highs. I normally wouldn't have sold my entire position, but I sold because that was right around the election. I was like trying to hedge my bets. I'm like, shit, this thing could go south quick. So let me start taking some money out of the markets. And then right after, like a week after I sold, it just started taking off from like 21 to 72.
I know, yeah.
And then here's this is the important part. Sorry, go ahead.
No, you go finish.
Okay, so I was going to say that this is the important thing I think that people shouldn't be chasing because I FOMO'd a little bit because it went from 21 where I sold to 72 and I'm watching this week after week, right? But I had enough experience and discipline to say this thing will come back down. And Kalin, I took the fib retracement from the height of it. There was 2 days it hit its top, and then the two following days it closed lower. So I'm like, all right, this is probably the top. So I drew the fib retrace and I had $38, $39 was white, the 618 level. And I'm like, all right, I'm going to put some buy orders here. Mm-hmm. And I waited exactly 3 weeks for that to hit. I think I posted about that. You saw it, Blake.
Yeah. I
remember when that happened. I got my shares 30 cents lower than you.
That's right. So I think that's
what like $39. I was in at 38.70 or whatever it was.
Bastard. But yeah, no, I'm saying like that's a pretty important lesson. Like so like a lot of people now are like posting saying that they're making a ton of cash, whatever. Yeah, this is a bull market. You could sell, buy in, you could still probably go up, but try trading a sideways market or try trading a bear market, right? And so like the importance of being patient and not chasing, like not getting caught in something is incredibly important.
Mm-hmm. Yeah, I think that's a really big point to make, especially in this last year. I mean, it's really hard, especially for someone who's new at it, to look at the news and see these articles like, oh, so-and-so, high school kid or college kid just put $5,000 in their, Robinhood account and they've made $1 million through 2020, right? Like, I mean, that's fine, good for them. But like the reality is that the market that we had over the last year, if you just look at the S&P or the Dow Jones, is completely incredible, like upstrength for the whole year, right? So everything follows those to a certain degree. Like even in small caps, like the stocks I play, there's so much strength behind everything that you really have to realize and reset. Like when we start going back into a sideways market or potentially a bear market, if there's a recession or whatever happens, you have to realize that a lot of those stocks that start to go up, there's going to be way more false breakouts. There's going to be way more short selling. there's going to be, you know, things just aren't going to move the way that they used to move. And that's when risk management and, you know, knowing your own setups and all that kind of stuff really comes into play. Because as long as you have a really good system that works for you, then basically all it comes down to is you're just downsizing what you're expecting to make on that system that you already know works. Because any system will, in theory, work in any type of market. It's really just the amount of profits you're going to make are going to go down if it's a bear market or, you know, whatever. That's kind of the bottom line of it. Is you have to kind of reset your outlook, but the patterns and the trends will always stay the same.
I have to point out something that's really funny about 2020. And Blake, you got in on like probably the most awesome time I've ever seen, because like 9 years I've been investing, I've never seen a market like this, like the way the stocks move. So your timing is amazing. But I wanted to point out something I read the other day, was that like all the traditional OG investors have either lost money or barely eked out a profit this year, in 2020, and they can't even beat like David Ihern's Greenlight Capital. They did 5% this year, whereas the S&P did like 15%. So if they had just bought a freaking index, they would have, you know, killed it, right? But so like this, I wanted to point out that this market is very unusual, and it's freaking out a lot of people that supposedly know what they're doing. And the Robinhood guys are like fucking buying naked options and just making tens of thousands of dollars, and it's pissing me off.
Yeah, that's the other thing that we've never really seen before too, is right, like there's so many people that are working from home, like, you know, Blake, yourself included. There's like thousands, hundreds of thousands potentially of people that have never been able to trade, and they're doing exactly what you're doing, where they're saying, okay, well, I'm home, I might as well try and make some money. And then they all get in these stocks, and that artificially pushes things to the moon, right? So as soon as a lot of those people start going back to work, there's going to be a lot less buying pressure, and it's just like it's just a really unprecedented year. But like I said, I mean, as long as you have a system, like as long as you're confident in your system, you have set risk, like you're making money, then there's no reason you can't keep making money. You just have to be constantly analyzing the markets, like, you know, David and myself always do. We're always changing our opinion, and we're always, every single day I'm on my computer making sure that what I'm doing now is still working because sometimes patterns just stop working, and then you got to look for something else, right?
So I actually read another funny statistic saying that the month of December had more options trading than any previous month in history.
Yeah, I saw that too. I think it was 2020 was like, what was it? It was like, I can't remember the numbers. It was something like there's usually like, I want to say like 500,000 or so trades in a month or whatever it was. And it was something like there was like 2.5 million averaging, or like whatever the statistic was. It was like 3 or 4 times the average for all of 2020 in options.
Yeah, and I think it's heavily influenced by YouTubers. We were talking about that earlier, Blake. Like the YouTubers saying they made X amount of money, because a lot of them are not doing it buying actual equities. They're just basically placing bets on call or put options. Well, mostly call options.
Yeah.
Right.
You guys ever get that ad where the guy was like, "Stock trading is dead. All the top guys are trading options now."
I can't stand it.
So do you guys think that, because everyone, like you guys said, that this year is like none other. I haven't experienced anything else, so I read about it and I've like done my research to try to prepare myself to see what could happen, like when things crashed 2008 or whatever. But do you guys think that this is kind of going to change the future of the way that the stock market goes because of how much more interest is in here? Like with all the meme stuff, like GameStop has gone up 200% this week or something. It doesn't even make sense. So obviously, like, that's not sustainable. But do you think that there's that statistic you just said, between 500,000 to 2.5 million trades a month? Do you think this will to some extent continue going into the future, or do you think it's going to die back down?
You want to touch on that first, David, and then I'll.
Yep. I definitely think the trading volume will, and this price action can't be sustained. Where's the money going to come from, right? Like, as soon as stimulus is done, as soon as debts need to be repaid, evictions, mortgages, all the moratoriums are done, I think there's going to be a vacuum of debt, and that vacuum is going to suck some money out of the market. But touching on if it might change something in the future, actually, Kalin, we were talking about this the other day. We're just looking at it as a positive, actually. One thing that I noticed that I was reading about was that in 2018, quants, so they're the trading firms that use algorithms to trade. 2018 was the worst year ever for quants, and a lot of them actually had to shut down their businesses because the market started to change around that time, that their algorithms no longer worked. And from what I'm seeing today, my theory is that it's because of companies like Robinhood and whatnot offering zero fees for trading, and so there's more retail investors trading now, and a lot of the retail investors are kind of screwing up the algorithms now, because a lot of them are going to do something that's like rational, like chasing, right? The algorithm is like, you're not supposed to do that, and people are like, fuck it, I'll buy it at the top, let's see what happens. You know what I mean? It's just screwing them up. So I think things are coming full swing, where it used to be that only sophisticated people were trading, and then so it's a little bit more predictable, and the quants were winning. And then now there's a lot more retail money in the market, and it's kind of changing the dynamic where reading emotion now is going to be more important than patterns. That's my thing, Kalin.
Yeah, I'd probably agree with like most of what you're saying. I'm still not convinced there's going to be like some catastrophic pullback recession, just because, I mean, you know, it's like I've always said, like, you know, the market, the indexes, those really reign supreme over everything. Like, no matter what people are saying, no matter what, you know, analysts are saying, until the market shows you that it's going into a recession, there's no real reason to like think that you're going into a recession. So, you know, to what level that is kind of up in the air. But I think your point on just the fact that there's so many people that are trading from home now, and so many people are getting into this. I think, like, I mean, what I think is probably going to happen, to be honest, is I think so many of those people are getting the wrong habits and just buying everything and expecting it to go up and making a lot of money. It's true, right? Like, I mean, if you know, you got to think, if you've done something for a year and you've made money at it consistently, and then all of a sudden the markets take a turn, you're just going to keep trying to do that. And if you're not smart enough, or, you know, dedicated enough like Blake is to take the time to do your research, then all you're going to keep doing is the same thing, and you're going to get frustrated and wonder why you're not making money, and you're going to keep losing money. Like, people might take out loans to try and make more, and it's just like, that's just going to drop right off to nothing. So I think there's probably realistically one of two things that are going to happen. It'll either be like what David was saying, where you're going to have all these people that are trading more often now. Maybe a lot more people are going to be working from home and be able to day trade, which is great for me because that just means more plays. But I mean, like, even recently, I remember, like, I think it was like 2 days ago, I was telling David, I showed him a picture. I wrote in my phone specific setups for me to play at specific times a day, because there's just an insane amount of plays happening. Like, you know, I wake up in the morning and I got 15, 20 stocks on my watch list. Like 6 months ago, I'd have maybe 5 or 6, right? So like, I'm sitting there and I got this huge list, and I'm trying to play everything because I don't want to miss out on the big move, and I start like fumbling over myself and making mistakes. So like, I wrote a thing in my phone that says, you know, between this time and this time, only play this pattern. You know, between this time and this time, only look for this pattern, because I had to kind of reset myself, right? But so it's crazy right now, but I don't know if it's gonna continue or if everybody's just gonna lose all their money that are these new retail investors and just, you know, say screw it and never trade again, and it'll go back to normal, right? It's hard to tell.
Yeah, I think there's a good chance that some money's going to. I'm not calling for a recession, but I do think a little bit of a correction, a little bit of a pullback is imminent. It's imminent. The market's way too rich for where the economy is. So, because like for the last few years, because of my investing, I started learning a lot from macro investors, guys like Ray Dalio and Howard Marks, and these guys don't trade specifically assets. They'll go wherever they think is growing. So they'll trade bonds, they'll trade assets, they'll trade forex. They'll put money wherever they think it will be safe. So if they see, you know, that the economy of the West is not doing well, they'll put money into Asia. Like so they look at the big picture. So I'm always trying to look at the big picture where everything's going, and then try to decide, you know, how I should trade. And so like, yeah, I don't think a recession is coming, but I do still have, like, I tell Blake all the time, like, keep some cash on the side. It's like bullets in a gun. The guns are freaking useless without some bullets, right? So it's just the same thing with opportunities. If you don't have the cash on the side and you see a great pullback, you're like, shit.
Yeah, I know. I like David, you and I have talked about that. I think both of us are in like, what, 70% cash or something right now. Like, I know I think I only have maybe a third of my available money in stocks right now, like in investments.
Actually, I'm now, I think, maybe just 20% in cash now, because I started buying in some of the Bitcoin related stocks, some of the funds.
Okay. Yeah,
because we the TSX just back in December approved the first ETF for Bitcoin, and so I was like, well, if I can get some Bitcoin exposure with my TFSA and my RSP, like, why not? Because I know this thing's it's a high probability it's gonna go up this year. And so, and I looked at the premiums. You're basically paying a 10% premium versus what you would pay if you bought the actual asset. But to be able to hold it in a TFSA, that's actually pretty good premium to pay. So I'm like, so yeah, because of Bitcoin, I'm 20% in cash now.
You have a problem. Sorry, if Bitcoin and Tesla just disappeared, you wouldn't even know what to do with yourself anymore.
Blake, you sent me that awesome meme a while ago. What was it? It was the old man sitting on a rock and he's talking to kids and he's like, "Kids, I retired off one share of Tesla."
Yeah, one share of Tesla and half a Bitcoin.
Yeah, I retired off one share of Tesla and half a Bitcoin.
That's great, man.
That's gonna be me. Like, are you looking into Bitcoin at all or no?
I did a little bit, but like I said, like it was just the fees were a little bit high for me, not really knowing much about what I'm doing yet on it. So like I had like $1,000 in it, and whatever, I made like $20, but I just like I put my money into I have some in Mogo and Galaxy, so
Right.
stocks that are, and I even have a little bit in Riot on a little pullback. Just like stocks that kind of mimic what Bitcoin is doing at the time. Just because I can look into those companies a little bit more and learn about it. I'm still learning about Bitcoin, what exactly, like everything that goes into it, and just like I don't have enough knowledge yet to be confident to put a large chunk of my money into it already. You know what I mean? Because I don't know, like kind of like what I said earlier. Like if I'm keeping that overnight, I'm keeping that for a long time. I want to know what exactly I'm putting my money into. And although I hear like so much hype about it, Bitcoin's going to be 200,000 end of 2021, all this kind of stuff. It's like I still want to do a little bit more research before I start heavily investing my money into that.
Yeah, that's really good to hear.
No, that's really important.
So many people get so trapped in the hype, man. It's like that's such a key thing, is that you just touched on it. You got to know what you're buying if you're going to hold something long term. Like no matter what anyone says, David I know knows everything about it, but he's you're still not willing to buy it unless you do your own research, because if it has a 10% pullback or a 20% pullback and you're only in it because somebody else has told you to do it, then you're going to be nervous. But if you know and you've done your own research, you're going to say, "Oh, I'm not worried about that because I know this, this, and this," right?
So this is a lesson for the kids. Bitcoin did like a 20% drop just yesterday, just Friday or whatever, and it was off one really flawed news article that said there was a problem with the blockchain. But because I actually know how the blockchain worked, I'm like, what the hell? So I bought the dip. It was a quick day trade on the futures. I made $500 in a day because I'm like, it's ridiculous.
Yeah,
I know.
That's all hype.
Like one thing that I've seen a lot, like because I have like a somewhat amount of followers, I get a lot of messages about this whenever I post a trade. Oh, how do I do this? I want to make money, blah blah. So I've had some people that I've said like, okay, this is what you do to start. This is how you open your account, blah blah blah. Make a watch list, start looking into stocks, figure out what you want to do, investment, swing, day trade, whatever it is. But one thing that kind of like sort of frustrates me is this is what they say. My buddy said Neo, this, and GameStop are hot right now. I'm going to put my money into that. I'm like, this is not what you want to do. You don't listen to your buddy that said this is the stocks that are hot right now. Chances are those are the ones you want to stay away from because there's going to be a big correction with it soon. And it just like, it makes me laugh because Neo and all, like GameStop right now, it's all the meme stocks. And that's what everyone says. My buddy said that this stock is hot right now. And it's just like, I still don't know much about what I'm like doing, but I've learned a lot this year. And I've already learned that like, you don't want to chase runs. So if, like even GameStop, I was watching it on Friday. It went up 72% at the most. I'm watching it. I'm like, I'm just going to buy in, make a few bucks and stop. I'm like, I'm just going to buy in. I didn't end up buying in, but it's just like, I don't know anything. GameStop is like, I don't know anything about them, about their fundamentals, about their earnings, anything like that. So I didn't want to put money in, but it's just like, don't follow what everyone else is doing. Try to do your own thing. I think, I don't know which one of you it was. I think it was Dave's video on the Instagram page. And it was like, if someone's gonna lose my money, it's gonna be me. Yes, it was you. Yeah. That's exactly it. Like if I'm putting my money into something, if I'm going to be the idiot that's going to lose it all, then fine, that's on me. But I'm not because I listened to my buddy Joe that says this stock is hot right now.
Yeah, because it's like twice as bad. It's like if you put your money at risk only because you listened to somebody else and they were wrong. Like you weren't even, you know what I mean? Like it just sucks even more.
Yeah, I know.
That's good. So you know what's funny? You two should talk because Blake, you could tell Kalin whatever is hot, and Kalin, you could just short that.
I posted my watch list on our Instagram story on Friday, and I got a few people messaging and saying like, "Oh, I'm long these stocks." I'm like, no, like, I honestly don't even know what these companies do. I don't care. That's not what I do. Everyone's like freaking out.
You know, I just had a funny thought.
It's like when Blake's saying like GME. I remember I was watching that all day on Friday because I actually had on my list in the morning for a short, and the pattern actually set up perfectly. And the only reason I didn't play it is because I was playing a different stock at the same time. But that would have been the same thing. It would have been in and out in 10 minutes, and then the 70% run up would have been irrelevant to me, right? But like people got to realize too, like I remember a couple of guys I know, like when Moderna had their vaccine announcement and it went through the roof, every day like, oh, it's it's this much, and then it's gone up another 20%, it's gone up another 20%. They're like, oh, maybe I should buy. I'm sitting there and telling them like, any stock that you see move that quick in the upward direction is going to have a massive red day. Like it's got to come back down because there's no support. All the guys like me are just going to be waiting to pile on and short it, and it's going to happen inevitably. The same thing's going to happen with GME. Like whenever it sets up, it's going to have a huge red day, and it's going to be an awesome short. Hopefully, I can get.
I feel like we're because of how fast communication works now with WhatsApp and all the platforms. I feel like we're actually living in an era where there's like mass pump and dumps, right?
There's a lot of guys out there too. Like I don't want to name names, but like there's a lot of chat rooms out there that the guys that run the chat rooms will pump stocks to make money and short it. So like the way it works, it's really unfortunate for the members is they'll find really, really low float, really low volume stocks that they know, with their 2,000 or 3,000 members, if they get everybody buying into this stock, it's going to give it enough volume to push it up. And then they'll let the guys push it up, and then they'll short it at the top and make all that money on the way down, and all their members lose all their money, right? Like it's something that happens, I don't want to say quite frequently, but there's definitely a handful of chat rooms that I know of that do that. And it's really bad, but that's how the guys that run the chat rooms make their money, is just basically by screwing every single one of their members who's also paying them a monthly membership.
That's ridiculous.
So, yeah, but it happens. I mean, like that's why it's, like I always say, you got to do your own research and you got to know what you're doing, because if you're just listening to someone else, I mean, they might just be trying to take your money. Unfortunately, it's like there's scams all over the world. It's no different in the stock market.
I think so. That's one of the most important things. Like, it's fine if you go online and you see some guy's video that says, "Oh, Bitcoin's going to go to 250K." Like, if that interests you, fine. But now find out why it could or would go to 250K. Don't just be like, "Oh, it's going there. Like, I'm going to buy it." Like, that's ridiculous, right? So I got a question for you, Blake. If you were starting out now, or even now, what would be a useful resource? Like, if we put out a PDF that had like basic trading terminology, like what's a stop limit order, how to read candlesticks, chart patterns, would that be useful?
Absolutely. Like I'm still like, even when I say I'm buying a stock that I'm just looking at doing a day trade with, I still like sometimes do I click stop market or stop order? Like it's like, which one am I clicking? So even though like I've only been doing this for 9 months now, but I still don't know fully what the terminology is. And I've watched videos and like Googled it, but there's not really, honestly, like the TD one isn't bad, but there's not really too much solid info out there, even just on the basics like that. So I think that something like that would be really valuable.
Yeah, because I was thinking maybe Kalin and I should put something like that together. Just really, how to read a candlestick, basic traditional chart patterns, the limit orders, maybe some terminology.
Yeah,
I'd like to touch on that maybe in our next podcast or whatever. Just kind of go over like some really basic stuff, like what to look for, red flags, how things work and stuff like that. I think we touched on it a little bit, but like maybe we'll get into a little bit more detail on that.
Yeah, even if you do like a quick, like you could start doing quick videos like that on your page of like anywhere from 2 to 10 minutes maybe of how to read a candlestick, stuff like that, because those are the ones that it's like, that's what I'm YouTubing if I'm YouTubing something. You know what I mean? I'm not YouTubing why is Neo going to $70. It's how to do the fundamental stuff like that.
Why does Neo have a big green candle?
Oh man. Okay, that's good. That's good to know.
Yeah, I know. Even my buddy, like, what was it, on Friday or something like that? He decided he wanted to open an account, so he just opened a Questrade account, and he was trying to buy a stock, and he sent me a screenshot of it. He's like, I'm trying to buy this, but it won't let me. What am I doing wrong? He's like, so I had to tell him, like, what to click limit and click the bid and whatever. And so, yeah, that's probably a good thing to touch on.
Okay, so maybe we should think about doing those. But anything else you could think of, Blake? For anybody that's getting in, because I think me and Kalin are so deep into it now, like we can't even think backwards on what could be useful, like how,
Yeah. Well, the question I get is, how do I start? So you could literally put that as a YouTube video, the title, how do I start trading? And just whatever that means to you is kind of go off that. It could be like how to open your account, how to create a watch list, all that kind of stuff. It could be all the steps. You can make different videos for each thing. How to open an account, what to look for, so the fees, that kind of stuff. All of that. You could go for how to create a watch list, what stocks you want to put on a watch list, how to organize it, what each thing on a watch list means. I sent a screenshot of my watch list to someone today. Oh God, this looks overwhelming. I don't know what any of these numbers mean. The number in the box is the price right now. The green or red number is the post-market, what it's at right now, up or down. And then the percent is what it's gone up or down in the day. The acronym is what you type in, the ticker, and then the word underneath is the name of the company. So there's like so many little things. And like, I still don't know anything, but 9 months, like, it's like that little stuff is kind of like automatic to me. But when I'm explaining to someone else, I really, really need to dumb it down as much as I can for people to understand it. Because it is a lot more complex. And I remember a year ago, even like when I was in high school in grade 12, I had a friend named Chris. Oh, I put all my money in weed stocks. I'm up 50 grand this year. And like, I'm like, I don't even know what that means. Like, that was when weed had its big boom, or cannabis rather. And, I had no clue what that even meant, and it was so foreign to me. But looking back now, I wish I started reading into it then. I'm glad I am now. It's better to get in it sooner than later. But there's so many little things that I could even write down, like what questions I get and like how much to break it down. And you guys can make videos on that, because I don't know anything. I would just tell people like what I've learned, the basics about like how to start, create a watch list, how to buy, what each word means basically. But you guys know so much more than me, so it could be a lot more valuable with your guys' knowledge putting videos out there.
Sorry, I just got a phone call.
So
actually, I like that.
Yeah, I think that'd be a really good idea. Just, like a lot of people just want to know how to get started basically and know how to buy, like how do you buy a stock, right? Like, because we're still trying to figure out like exactly who our viewers are, right? Like we don't know what level they're at. So until we get a lot of that information out there and see kind of, what people want to see more of, then I think we'll have to kind of touch on everything a lot.
That's another question that I get is, if you could send me a video of how to start, could you send it to me? Could you send me a video of what I do to start trading? Like that those are the questions I get all the time. I get like dozens a day about that. So
Okay.
It's just like a lot of people my age, because that's primarily what my following is, anywhere from like, say like 15, 16, 17 up to like mid 30s. That's what the majority of my followers are. None of them have any clue. I didn't have any clue. It's just like, if I didn't have Dave, I would definitely not be anywhere near where I am right now. Not even close. And it's like, I'm very thankful for that. But you guys can make those YouTube videos so that everyone can have a piece of Kalin and Dave. Yeah.
Kalin, question. Does either Questrade or IB have like one of those, was it practice accounts?
Yep, they both do. Yeah.
You think we could do a series of videos with those just to kind of show off the functions or whatever?
Yeah, paper trading is great. Like it's for people that don't know, like most brokers, like interactive brokers in Questrade, like you have to open an actual real money account. But once you open that, you can log into a paper trading account and you can load it with as much money as you want, like up to like $1 million or something like that. And it's all the same. So don't get too excited. But but it, like, you can set it up identical to your real account, so you can trade in real time. You can make all the right orders. You know, you can learn how to do it. And like, I've always had mixed feelings on paper trading because like I did that at the very beginning. I paper traded first, and I was making money. And as soon as I started using real money, I was losing because it's totally different when it's your actual money on the line, right? But like even now, I mean, like even this week, I was paper trading a couple stocks because there's a few new patterns that I'm looking at. And, you know, now I'm at the point where I know how I play and I know how much money I use in trades. So I can do my normal trades in the morning or whatever. And I can open my paper trading account on a different account. Like I can have Interactive Brokers trading real money and Questrade open trading paper trading at the same time. And if there's something that I'm kind of interested in or something I've been tracking, I'll paper trade it and make sure it works. And then once I know it works, I'll hop back over to my real money.
Interesting.
So it's a really, like, I think once you've traded with real money, it becomes a lot more useful, but it can be a little bit over exciting when it's not, like, when you've never traded before, because, you know, like I remember when I started, I would just buy something and like it would go down like 50%, and then like 2 weeks later it would be back up 20%. I'd sell it and be like, oh yeah, I know what I'm doing. I know how to make money, right?
Yeah, I think we were talking to Sam about how off camera last week, how he could get started. We're like, if you're gonna trade, at least if you really want to learn paper trade, is great to learn the functions. But if you really want to trade, like, put some money in it, because it changes the dynamic completely, right? Once you have some skin in the game, then suddenly emotions comes into play.
Yeah.
Right.
Especially if you're trading like a few times a day. Like one of the biggest things I noticed is, like, you know, if I'm paper trading and, you know, I make 3 or 4 trades and I'm down, you know, say $500 or $600, and then like at the end of the day, I'll still risk just as big, and maybe I'll make it all back, right? Or maybe I'll break even or whatever. But in my real money account, if I'm down that much on the day, like that might be my max loss, or like maybe, you know, I'm probably going to lower my size way down because I don't want to risk losing even more money on the same day, right? So it changes the dynamic, but it's definitely a helpful tool, especially if you're learning, just to learn the functions and learn how to buy and sell, learn how stops work, like all that kind of stuff is really handy.
Yeah, I think I was talking to Blake a few weeks ago about how you need to get a little scarred. You need to feel some ups and downs, and just after a while, just kind of get scarred and get used to it, right?
Yeah.
Yep.
Yeah. So like, Sorry, was that Blake?
Oh, go ahead. So my friend, he did it. I think it was an option on Palantir, and that day he lost $2,500 American, or like just under $3,000. And just like on the day, like it ended, money was gone. And now, like, when me and him talk and the stock's like going down or whatever, he's like, honestly, ever since that day, I'm just like immune to feeling the pain of a stock going down. So it's like nothing even phases him at all anymore. It's so funny. I'll be like kind of upset that like whatever because sometimes we like buy stuff together. We're like, hey, we're confident, let's go. And I'm like, dude, it's going down. This isn't a good call, blah, blah, blah. And he's like, honestly, man, it doesn't matter. It'll work out, because he's just like, I'm numb to any feeling of that anymore.
So does he just like lose all his money on that trade then?
No, he's like,
I'm the complete opposite. Like I've been burned to the point where I never want to feel that again. So.
Yeah, I don't know. He's a zombie, or he's a machine. Yeah. I would feel the same. Like I feel ever since I've been down that much money on Palantir and Tesla, I'm a lot more weary to put my money into something that I'm not confident in. But he's just like immune to it now.
Yeah. That's weird.
I know.
Yeah. I've always like I had, you know, 1 or 2 big losses, and ever since then that just totally changed the game for me.
I bet. That's so funny.
Yeah, I remember like the first big loss I ever had. I was telling David this on one of the other episodes. Was like when I first started trading, I didn't even know anybody that traded. I didn't even know what, like, really, if I could watch charts in real time or anything. So the way I was trading was on my phone. I had a Questrade account, and I would literally just like scroll through Seeking Alpha, look for news articles. And if I saw a news article, I would just open the stock, no chart. It would just show me the bid and ask price. And I'd say, it's up, you know, 20% pre-market. I'm just going to buy this at the open because it's obviously good news. And then I would just, you know, buy or shares, like no risk, like no potential profit, like nothing, and just hope for the best. Wow. And I remember it was way back. I didn't have a lot of money in the bank or anything, and I lost like $300 US in maybe 10 seconds. And ever since then, I was just like, you know, it wasn't even my biggest loss, but ever since then, I was just like, okay, I gotta set some parameters, make sure I don't lose money.
Was that with options?
No, that was the other one that I am holding my grudge against options forever.
Yeah. By the way, Blake, if you were like the typical guy that got in 2020 traded options, you would not be on this podcast. We have a no options traders policy here. Fuck those guys.
Yeah, long story short, I was at the beginning of the year when like we were working from home too, and I was at the cottage and I was like, I was working from home, trading, like day trading like normal, and I was like, I got some time on my hands, like let's try and learn options. Like they're pretty volatile, they move pretty big, maybe I make some money. And so I ended up buying one option. I was just like, but like they're contracts, right? So one option is if it's $10, it's $1,000, right? So I bought one option contract. It was like $4.50. And I was like, oh, okay, this is this will be fine. I'm just going to like swing this overnight because the pattern looks pretty good. And then woke up the next morning, it was worth like $1.50. I was like, so I sold it. I lost like $300. I was like, you know what? This is the stupidest thing I've ever seen. Trading options again. And then these stupid little charts with these little dots. So yeah, I just didn't want anything to do with them after that.
Yeah, because I was during the first quarantine, I really wanted to get into options because it was just like I thought let's expand, and I was getting deep into learning it. And what I learned is that options traders, a lot of them have strategies that really don't care where the market goes. They use something like an iron condor, like a strangle. They buy both sides kind of, and as long as you're trading within that range, they can make some money. And all they're calculating is the decay of the contract, like the value and the volatility over time, and and that's how they make money. But where I think people are going wrong now is because people are treating options as like a roulette table. You bet on red, you bet on black. And because the market's only giving you red, they're not losing yet, right?
Yeah, I know.
And that's like the problem. I just saw yesterday, the news was saying that options volatility, the implied volatility is at its high. So implied volatility is the premium you pay on the contract, right? And it's at an all-time high. That means if you're betting on Tesla to be over, I don't know, like $1,000, you're buying a call option for next month for Tesla to be over $1,000. They're probably charging you $50 for that option. So Tesla's got to do over 10,500 or 10,050 for you to make any money off that contract, right? If it makes $1 less, you lose, right? If it expires out of the money, you lose. So it's like, how can these people keep it up for, right?
Yeah, I know. Like, I don't want to say the safer way, but I guess not even an easier way. But like, if you selling options, then the only benefit to that is you have time decay in your advantage, right? So if you get a stock that's kind of moving relatively sideways, or it's not moving too much, and you sell a call or a put, which you're basically expecting it to go in the opposite direction because you're shorting it essentially, then time decay works in your advantage. Whereas if you're buying options, you're fighting time decay. So every single day you're losing money unless that stock's going in your direction, and it has to go in your direction by a certain percentage as well. Yeah. Otherwise, you're still not making money either. But obviously, then you're shorting an option, which is incredibly volatile, and that could blow you up in a matter of days.
Well, see, this is the other thing that's kind of dangerous with platforms like Robinhood. They're letting people sell naked options, which means, so what that means is, so when you're selling an option, you should already own the underlying asset, because the way the options work is it's supposed to be an insurance mechanism, right? If I have $100,000 worth of Tesla, at that level, I don't really want to sell my position anymore. But if I look at the charts and I'm thinking that the market's going to go down, I'll sell some call options, because if the call option expires out of the money or the price goes down, I make money off the premium, right? So, and I never had to sell the asset, right? So that's what I would do. But these platforms are letting people sell naked options. So which means if the contract expires, you have to pay up now. You don't have to buy the shares to make up the difference, because they're still they're contracts, right? And so that's what's really screwing up the market too, right? It's really dangerous.
A lot of people don't realize that, because if you're looking at Microsoft or something like that, or Tesla, where it's what is it, $700 or $800 a share or whatever, one contract is 100 shares.
Yes.
So if you bought 2 or 3 contracts that cost you $3,000, and you have to execute that order, then you gotta spend $20,000 to buy all those shares.
At today's prices, it's like a six-figure transaction.
So it's really, I don't know. Wow. It's not for me. I mean, I know how the guys do it. They basically, like as David said, they hedge their position. Like they'll I know a lot. Like one of the things I was reading about is basically channeling around earnings. So they'll do call options and put options, and basically as long as the stock moves outside of this range, they'll make money, right? So there is ways that, you know, it's just a different way of trading, really.
It's all mathematical, because the way they do that is they'll sell a call to fund their buying of a put, right? So that's how they're funding. So they're not putting their money up front, right? But what happens when it moves outside of that parameter? Then it's like, holy shit, you owe a ton of money, right?
Yeah.
And the danger is
even some traders that trade like currencies and stuff like that, they'll do that in a different regard too. Like, you know, there's guys that they know all the different world currency markets, so they might know that, you know, the Japanese yen and the British pound or whatever kind of work opposite to each other. So whenever the British pound goes up, they know the yen's going to go down, but they don't know which one's going to move further. So they'll buy and short the same amount of each one, and then if the British pound goes 10% and the yen goes 5%, they still make 5% overall. So like there's different ways to do that same kind of idea in just regular stock trading, but it's like you got to know a lot about economics and everything, which is not my area of expertise. I don't even know company names.
So apparently we know enough about it to stay the hell out, because it's wrong.
Yeah.
I mean,
it just doesn't. I mean, it doesn't. Right? I mean, if it interests you and you like it, then, you know, all the power to you. But it's not for me.
there are very few options traders, independent option traders out there that make money. I think a lot of them are working for a firm and they're playing with the firm's money. And one of the things the firms do, which is smart, is that they'll give you a daily loss limit. If you hit your limit, you are out. Go take a break, take the day off, you're done, because they don't want people trading on emotion, right? In poker, it's going full tilt, right? So I think you can actually
set those in accounts too. Like I have a mental daily loss limit, but like you can set that like in your trading account. You can say like, I don't want to lose any more than $1,000 a day. And if you've made a few trades and like your position's going against you, as soon as you hit $1,000 loss, it'll just close your position. So you can set that in your brokers for like day trading and stuff like that.
I didn't know that. That's interesting.
Yeah.
We can't do that for TD, can we, Blake? I haven't seen it. What's that?
TD's more basic, like just like the layout is super user friendly, and it's just like there's nothing there. It's like buy, sell, that's it.
Yeah. So yeah. All right, I think we're coming to the end of this podcast. If you could leave, because we're hoping to get some of your followers to view this episode and hopefully avoid some mistakes and take some information away. If you could give your followers some advice, what would it be?
Don't listen to what everyone else is saying. Like, don't listen to obviously, like, yesterday was kind of crazy. Like, there was a few crazy, but don't listen to what the hype stocks are. Look into the companies, or like learn how to do charts, stuff like that. And I'd probably say the biggest thing is, if you're putting your money in, you need to be prepared to lose it. And obviously, like, you're not going to lose all your money. Like, one person said, "Oh, my uncle said that he lost all of his money doing stocks," and I'm like, you don't lose 100%. Like, there's very few times I think where you're going to put in $10,000 and you're going to lose every penny. That stock is going to drop to zero. But you do need to be comfortable that could happen, I guess. So get comfortable with it and just do it. Like that's how you learn. At the end of the day, it's like I can only explain to someone that's like messaging me about it so much. At some point, you just need to put your money in and try. And that's what I did. Like, Dave taught me as much as I could, but until I actually started doing it myself, that's it. So if you want to use the simulated one, sure, great. But even like Kalin said, it's not the same as when you're actually using your own money, because you can have $1 million in that simulated one, but until you put your own $5,000 that you've saved up, you work so hard for, into an account and you start trading it, the emotion and everything is not the same. So out of everything that you can say, eventually you just need to do it. You just need to try, because that's how you learn about it. And you're going to take some hits and you're going to lose some money probably, but at the end of the day, it will benefit you long term, because this is honestly life-changing. And it's like nothing else in this world, honestly, in my opinion, for making money. Maybe like flipping houses, real estate, something like that, but this is just like an exception. This is so much more than a regular job, so much more than any salary position you could get. This is something that will set you up for the rest of your life. And it is scary. You can make mistakes. You will lose, blah, 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 but you just need to do it. So,
Kalin, you got anything you want to add on top to that, or your own advice?
No, I think that's perfect. At the end of the day, you know, you just gotta give it a shot and see what works for you. And I mean, just make sure, like I always say, the number one rule, just make sure you know where you're going to sell your position if you want to get out. Like before you get in, have a idea of where you're willing to take a loss, why you're going to take a loss there, and when it gets there, make sure you take that loss and don't just hope it comes back up.
Yeah, I think I want to add on what Blake was saying. Like, this is probably one of the best things. Like, financial literacy, financial education is probably one of the best things a person can do for themselves, especially at a young age.
Yeah.
And I'm a stat guy, so I just want to put some stats out there. Like, anytime you talk to an analyst or you see an analyst on TV or an economist, and they're talking about how there's no inflation, there has been inflation in the last 10 years, they always reference this thing called the CPI, the Consumer Price Index. It covers the price, it tracks the price of a bag of milk, Netflix, shoes, right? Whatever consumer products are, and that number doesn't really go up or down. And so they say, oh, well, there's no inflation, or it's 1%. But a lot of really smart people have said real inflation is around 14% a year, and that means every 5 years, the value of your money is halved in terms of its buying power. And the reason you don't see this is because a bag of milk doesn't change in price over 5-10 years. Netflix maybe goes up $1 every few years, right? You're not feeling that. Yeah. But if you look at the cost of everything that actually matters and is of a high value in your life, medical costs, insurance, car, college education, homes, these things have astronomically increased in price, right? And so if you don't understand how to, like, savings is essentially letting your money slip 14% of value every year, right? So if you can invest somehow in stocks, equities, the market, or even property, that's the only hedge against this inflation.
Like, this past year was literally evidence in front of everyone's eyes that you can lose your job and that safe paying salary desk job in a heartbeat. It's gone. You're not working anymore. Your business is closed. Hundreds of thousands of businesses have closed everywhere. That could have been your job, and then you're left with what? How are you going to pay for the food to get on your table? How are you going to pay for the roof over your head? You need to figure out something else to do for yourself as a backup plan, as a safe net. And even if it's just a side hustle right now, you still have it there for that possibility. It's literally like 2020 was literally proof in front of everyone's eyes that anything could happen. Anything could be taken away from you at any time. So you need to figure out some other way to make sure you're comfortable.
Yeah, either multiple streams of income, or I hate the term passive investing, but it is true. There's, you can put some money in an index and just at least let it sit there versus,
I know.
Yeah, I mean, even if you put your money just into an index, you're 8% per year over the past 50 years or whatever. So you're never going to get 8% per year putting your money in a bank account. Ever.
I know.
So put all your money into an index. You don't have to worry about it. It just sits there. You can hold it for 20 years. You're guaranteed to make 8% every year. Mostly guaranteed. You never know, but then you're getting
100%.
dividends. You're getting those regular little payments all the time too. I mean, like it's a no-brainer, really.
Yeah, 100%, 100%. So I think the theme of this episode is just get educated and don't listen to other people, because that could cost you your actual money, right? So thank you, Blake.
People for ideas, but make your own decisions.
Oh yeah, 100%. Always listen, but verifying, like, do your own research. But I want to thank Blake for coming on, and I hope we can get you on again real soon. And then, Kalin, same thing. Talk later. You know what? Let's talk later about putting up together a PDF or those shorter videos, because I think that's a great idea. Yeah.
Yeah.
All right.
Perfect.
Thank you, everybody. Take care.